Hello everyone, I have created the final solution for all your market structures and ranges problem. I heard you and I know what you're struggling with. You are not retaining the information from the higher time frame when you go to a lower time frame, which basically translates into feeling lost and losing trades. So I built a ranges system to help you obtain and use the information provided by the higher time frame when you go deep into lower time frames. First, we need to detect what is the trend of the current market structure. Of course, there are several different market structures and each market structure will be of a different time frame. Every trend that is formed in the market has a target, and until that target isn't met, we can expect price to continue following the order flow of that trend. So if we are on a bullish trend, for example, and the target are equal highs that we have here, okay, we anticipate that the target is this one. Until that target isn't met, we can expect the higher lows to hold price every time price makes a higher high. Higher low, hold price, makes a higher high until the target is met. Once the target is met, then we can expect a retracement or a reversal to occur, since the target, the purpose of this uptrend is already finished. Okay, so was the target met for the current trend? Yes, if it was met, expect a reversal. No, if it is not met, then continue the direction of the trend. We are always talking in terms of probabilities. Of course, this is not 100% true all the time, but it is more likely going to be true most of the time. So now, inside of this trend that we are going to see examples, don't worry, we have ranges. Okay, these ranges are basically this one. Looking at this same example, we have this first range that produced a high and a low here, then we made a higher high and a higher low, then another higher high and higher low, higher high, higher low, higher high, higher low. Now lower low and lower high. So basically every swing to the upside and then retracement is a range. So when we analyze a trend, we have to ask ourselves which was the most recent breakover of market structure within this trend. Following this example, the most recent break of market structure was to the downside here because price is making a lower low. So that means that the new range is going to be from this low to this high, okay? So now we are going to build a story about this range, and that story is going to allow us frame what is likely going to happen when we go into lower time frames. So now that we detected the last break of market structure, basically the range where price is working around, there are three main things that we need to ask ourselves. The last break of market structure, was it bullish or was it bearish? Okay, that will give you the direction of the market. Where is price coming from and where is it now? Is it coming from a premium equilibrium discount? Okay, and where is it now? Is it at a premium equilibrium or discount? And what is the expectation of price? Are we going to return to the region of the entire break of market structure, which is basically internal liquidity, or are we going to make a new lower low or a new lower high, higher high, which basically is external liquidity? And now I know this is sounding a little bit difficult, complicated. We are going to see examples and you're going to understand what I'm trying to say here. So we are going to look at this theoretical example here. The green trend is a higher time frame, the orange trend is a lower time frame, and the purple one is the lowest time frame. So we have three different market structures with three different degrees, okay, of importance. So we are going to analyze it, and applying this system, we are going to identify what is the likely next move according to what we analyzed. So first, the trend. We have three market structures. That means that we have three different trends. Why is price making higher highs and higher lows? And what is the purpose of the target of each one of these trends? So first, let's talk about the green one. The green one being the highest one. Since we are not seeing a bigger time frame compared to a green one, what can we tell about this trend? Well, it is a bullish trend, right? So price is making higher highs and higher lows, and now we are making a potential higher low since price is coming to a discount level. But we are going to be more systematic about this approach. What is the target for this uptrend? We don't know, okay? We don't know what is the target, if price is going to continue going higher or going lower, since we don't have a higher time frame. But what we can talk about is the orange one. We can see on the orange one, we had a bullish trend, and now we had a bearish trend. you can see a price has broken the structure recently to the upside on the orange trend here, and we are making a higher high. So what is the target for this new break of market structure that is being built and the potential new uptrend that might be formed here? What do you think, guys? Well, if the higher time frame is bullish, basically a green one, and we are coming from a discount level of the green one, then the target for this new uptrend, this new break of market structure, is likely going to be this high. In spite of the downtrend here on the orange one, we know that the higher time frame is bullish, hence it's more important and we have to pay attention to it. So since we are coming from a discount level and we are breaking the structure, the target for this new uptrend that is beginning to form right now of the green one is likely going to be right here. So was the target of this orange break of market structure, this orange new uptrend met or not? Well, until we don't hit this level, it's not met, so we can expect price to continue pushing higher. Now, talking about the purple one is going to be a different story, because you can see here the purple, we were on a bullish trend, but now we recently broke the structure to the downside. Why is this happening? Well, we are going to get deep into ranges and you're going to understand more, but for now you need to understand that why is price breaking down? Well, we have two options. Either price wants to go lower and make a lower low, or wants to mitigate an order block or the origin down here of this move up, which is part of the orange trend, okay? So since on the orange one we are anticipating move higher, that means that this purple one, okay, is likely to continue going higher from a discount level down here. And now we are starting a retracement to produce that very same retracement that will hit the origin or a discount level down here, okay? But now the good part is the ranges system and the ranges question that we're going to build. So we are going to identify which was the most recent break of market structure for each one of these levels. The first one is the green one. So let's talk about the green one. The last break of market structure of the green trend, okay, the higher time frame trend, was it bullish or was it bearish? Well, we can clearly see it was bullish. So we're going to see green, number one, bullish. Now, second question. Where is price coming from and where is it now in terms of this green trend? So we see that price is currently right here, right now, okay? So in terms of this green range that we have to understand is this one, from this low to its high. If we know that we are in this range because this was the most recent break of market structure, in terms of premium, discount and equilibrium, where do you think price is currently at? Well, we know that premium is above 50%, equilibrium is 50%, and discount is below 50%. So where price is coming from and where is it now? It's coming from a discount level and is now currently around an equilibrium level of this range, okay? So we can say price is coming from a discount level and currently at an equilibrium level, okay? So now the third question is, what is the expectation? Do we expect price to return to the origin, basically grabbing internal liquidity, or do we expect price to make a higher high or grab external liquidity? Well, since this trend is bullish, we are already coming from a discount level, okay? The expectation for us is for price to continue going higher now, because the internal liquidity, which was this one, all these lows, and if you don't know what internal liquidity is, I recommend you to watch all my previous videos where I explain everything. Since we are coming from grabbing internal liquidity and from a discount level, our expectation now is for price to continue pushing higher to external liquidity above here, basically making a higher high, okay? So we can say that the expectation is to make a higher high. So now we are going to analyze the same for the orange one. Again, which was the last break of market structure on the orange structure? Well, we can see that the last break of market structure was here to the upside, That means that we are trapped in this range from this low, which was the last low of the orange one, and this high, the last high of the orange one. So we are going to mark this level like this. And we are going to start annotating on the text as well. Are we bullish or are we bearish? Well, if we are breaking to the upside, that means that we are bullish. 2. Where is price coming from in regards of this range from this low to this high, and where is it now? Well, if price is here, we can see that the range from this low to this high, one more time, below 50% is discount, above 50% is premium. It is coming from a premium level and now is at a premium level. So we can see that in this example, different to the green one where we were coming from a discount level, in this case the orange one, this one right here, this range, is at a premium level and coming from a premium level. So what is our expectation? Well, to make a retracement, because we know that price moves from internal liquidity to external. We have internal liquidity around the lows that we have on lower time frames here, so we expect a return to the region, probably an order block here, and then maybe continuing higher, okay? So we can say that price is coming and at a premium level. And the expectation is going to be to return to region right there, to discount. Okay. So now we look at the purple one. What is the most recent break of market structure on the purple range? Well, we can see that we were on an uptrend, making higher high, higher low, higher high, higher low, higher high, and now we made a lower low, basically a break of market structure. We mark this as break of market structure. We identify the range now from this low, the last low, and the last high up here. Again, the same high as the orange one. And now we have to ask ourselves one more time, is it bullish or bearish? Well, if we have a break to the downside, that means that now we are bearish. So let's annotate this as well. Bearish. Where is price coming from and where is it now? Well, if we are on this range from this high to this low, we can see a price currently here, where is it right now, is coming from a discount level, this low here, and is now at a 50%, basically equilibrium, okay? So we can say that in the text as well, coming from a discount level and at equilibrium. So what is our expectation based on this range? Well, our expectation is to return to the region up here and then continue going lower, because the higher time frame, in this case the orange, is telling us that price is going to return to a discount level. So the lower time frame is going to do what the higher time frame is telling us. Okay, so what can we expect? Price to get to a premium level of this purple range, an order block or whatever, and then continue making lower lows. So there is a target that needs to be met for this purple trend that is forming right now, which is probably going to end up being the orange order block right here. In other words, we are starting a retracement of this orange move up, and that retracement is going to be seen on the purple move or downtrend here to then continuing higher. Okay, so expectation to return to the origin of the break of market structure, which was bearish, and continue the downtrend. So based on all this information, we have three valuable things here. We know that on the green one, the higher time frame, we are expecting price to continue going higher. That means that whenever price comes back into the order block that we have here, the green order block, assuming we have one here, we know that the chances are that price is likely to continue going higher. By knowing that, we can anticipate that this low might or might not hold, okay? It might hold since we have an orange break of market structure, which is very important, and it comes to the second important information. We had a break of market structure of a lower degree, That means that the probabilities of this order block holding now are going to be higher compared to continuing lower. If price wouldn't have made a higher high on the orange one here, we wouldn't have broken the structure and price was retracement, then in that case, since price isn't breaking the structure yet, we can expect this low to be broken. But in this case, as that didn't happen, we did have a break organic structure, we can anticipate that the probabilities of this order block to continue to hold price are higher, okay? And the last one, obviously the purple one that we already explained, based on this, we are anticipating a downtrend to our internal liquidity of the orange trend, and then once we hit a discount level, continue going higher. Because of the green one being bullish, we know that it wants to make a higher high, we know that price wants to go higher, so the blue one, the purple one will give us the entry. So I hope you enjoyed it so far, and now you are going to play part of the video like I mentioned earlier, where we analyze this on real life market conditions, and then you will see how well it played out. Don't forget to subscribe and like the video, because I take a lot of time to make this and it's free and helps growing my channel, okay? So let's get into it. So like you said, Guru, this was a break of market structure. This break of market structure range is from this high to this low, and we can identify the origin of this range to be obviously the main order block within this area, which maybe we can say it is this one. So where is price coming from? Price is coming from making lower low, basically running external liquidity, and it's coming from now, well, we are going to talk about the lower time frame structure, but now it's at a premium level of this range. So what would be our expectation at the beginning to go lower, right?
Yeah.
Okay. So now inside of this move down, we have a lower time frame structure, which was this one. We have lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. We were on a downtrend, but now price is shifting to an uptrend. Let's change the color so we can identify the different structures. Now price has recently broken the structure to the upside here. Why is price breaking the structure? What is the intention of price breaking the structure here? What do you think? What is the target of this up move? Why is price breaking and moving higher here?
In order to I don't know the answer, sorry. I know, but that is for what we was doing before, but I don't know what is exactly the answer.
Okay, no problem.
Yeah.
So you know how the market works.
Low or high. What we was doing earlier.
Why is price breaking and making an uptrend here? Because it wants to mitigate the order.
Yeah.
Exactly. So that's the target for this up move. Was the target met? Well, we could say that it was met because we are touching this order block right now, okay? So we could face right now another reversal to go lower.
Okay.
At the same time, price is approaching this point of interest. Price is coming from this point of interest. So we could say also that price wants to go higher. So what is going to happen now? We are probably going to see a range between this order block and now this order block. This order block right here is the same degree as this order block right here, because they are both created on the same degree of structure, basically, the orange one. Both of them stop hunted, both of them are coming from a higher time frame level, and both of them have broken the structure to the downside here and to the upside here, okay? So in spite of we expecting to move lower, there is another force, another bullish force down here, which is this bullish order block. So yes, we anticipate move lower, we are on a premium level, but we want to see price potentially stopping the down move around these levels. Make sense?
Yes.
Okay. So how can we go lower? Well, let's move to a weekly chart. By the way, let's mark these swings that we see here based on the orange swings. On the weekly chart is basically the similar situation to the monthly. We don't see more detail. Let's jump into a daily chart. Now, in the daily chart, we can see more detail. On this last swing up that is touching a higher time frame level where we expect to move lower, let's say that we wanted to short, okay, but we wanted to wait for a break of market structure. What do we have here? A lower time frame uptrend like this, high high, high low, high high, high low, beautiful. And this lower time frame bullish move that is coming, touching a higher time frame level, was broken to a downside. So this break, without knowing what's here, okay, without, let's say that we don't know what all this price action is, this first break of market structure down here, what is the target? What do you think of this move down? Why was price on an uptrend and now is breaking the structure to a downtrend?
To mitigate the order block.
Exactly. The same thing that we saw earlier, but now on lower time frame. So we can mitigate this order block, but there is something important to take into consideration. We are coming from a higher time frame level.
Yeah.
So in spite of this being the origin of this entire move up, that originated this break of market structure, okay, we can anticipate that price is going to break this low, because this low, this orange low that we have here, is less important than this blue high here, the last lower high of the blue trend line, which is the trend line, not the blue market structure, which is from a higher time frame of the orange one. Halil, are you following me or you got lost?
Follow bit. I'm a little bit lost here.
Okay, so basically what we're talking about here is that we have multiple structures on lower and lower time frame, but all of them are going to follow what the higher time frame dictates. And if the higher time frame is dictating that from here, price is going to go lower because this was the last lower high of the blue trend, which is the higher time frame, then this orange move that is touching the blue lower high is likely going to break.
Yeah.
Okay.
Oh, okay.
Makes sense? Okay.
Yeah.
Inside of this move of the orange, the last move up, we have this lower time frame uptrend on the daily. And this bullish uptrend on the daily, the green line, was broken. And what is the target? Well, first target this, but we are also anticipating that this could be a target as well. You will hear me in the live session talk about a lot of time about reversals. And I'm calling a lot of reversals, for example, the Euro-USD reversal that I'm anticipating on the daily, based on the higher time frame always. Okay. At the same time, here on the daily, we can mark maybe this trend like this. We can see that inside of this daily trend, we have a lower time frame trend. I'm not going to mark every one. I'm going to mark the last one, this last impulse down. We have a lower low, lower high, lower low, lower high, lower low, lower high, lower low. This is from a lower degree. One more time. Let's use black. So based on this, which was the most recent break of market structure? Down here, right? We made a lower low. Let me expand this a little bit. We made a lower low here. This was the last lower high. We made a lower low. Which was the origin? Well, we have an order block here. Price is coming from this order block, from a premium level of the current range. The current range on the day is from this high to this low. So what is the next logical move? What is the next, our expectation for price? What do you think, guys?
Go lower.
Go lower. And this low is probably the next target because it's external liquidity. Price is coming from a premium level, from the origin, from grabbing internal liquidity, and now it's heading towards external liquidity. And if we have into consideration that we might also grab this low here, it might continue going lower, and with that move, boom, take that low out as well.
Yeah.
We can go into a lower time frame again, 1 hour. What do we see on the 1 hour? Well, we were on a bullish trend. Again, the same concept. Like this. And this bullish trend was recently broken, and we made a lower high and now a lower low, a lower high and a lower low, which is the objective of this downtrend. Why is price breaking to a downside here?
As we said earlier.
Go lower.
Yeah.
Okay, so you can see how we go lower and lower and lower time frame. If we wanted to look for a short here, since the daily chart, the black line, the target of this current move is probably down here, that means that now that the 1 hour is on a downtrend aligned with the daily target, we can look for shorts. And where would we look for shorts? Well, let's analyze the current range. We have this high and this low. Where is price now? Price is at the external liquidity, just making lower low. If we wanted to look for a short, we wait for a premium level. Where is that premium level? At the origin of this break of market structure, up here, right? We can go to a lower time frame, 50-minute chart, the same. Let's go to a 5-minute chart, practically the same. Let's go to a 2-minute chart. Here we have another. We have this uptrend here, boom, boom, boom. Let's use this with color gray. No, let's use this color. And now we have another downtrend. Lower low, lower high, 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 la 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 la.
Yeah.
So again, we are on a downtrend on this lower time frame, but the higher time frame, which is this one, we are already anticipating a move higher to go to the origin and to take the liquidity out, the internal liquidity. So you can see here, we are already anticipating that if this breaks, we could be part of a long to aim at this level. And when this level gets when we get to a level, if we break again, we can be part of a short to go down here and eventually go to a daily target, which is down here. Okay, so you can see the fractality of the markets over and over again. It's just, the problem is that you have so many structures that you get lost. So that's why it's very important for you to mark the levels. If you want, you can build a system like this with these arrows, or you can build a system using ranges. Anything that might help you is going to be suitable for you, of course. But the important thing is that you have to retain the information of the higher time frame when you are on the lower time frame.
Yeah.
In spite of being on the 2-minute chart, we already know two things. We know that the 1 hour wants to go higher, the daily wants to go lower, the weekly wants to go lower. So we have a lot of information. So maybe you can write that down in a text. So when you go on lower time frame, you know exactly what to look for. And you can even annotate the levels, so you have the levels annotated as well if you want. You can see here, guys, how the AUD CAD analysis worked out perfectly. We anticipated that if price broke this lower high here, it will continue higher. It did. And then after hitting this order block, we would anticipate a move lower. And you can see that the targets were this low and this daily low here, and both of the targets were met beautifully. So you can see how good this system is and how well you can take advantage if you know how to apply it properly.